You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back, everyone. Today we're looking at some really interesting source material from the digital asset world.
All right.
And what's really jumping out is this shift, right? It feels less like hype and more like, well, serious grown-up infrastructure being built.
Exactly. It's about maturation, and the
Yeah.
speed is just incredible. What's fascinating is how these different pieces, things that seem separate, they actually connect. We want to get beyond just the headlines and talk about why it all matters, you know?
Absolutely. So let's kick things off with the markets. Wow, Bullish. That cryptocurrency exchange had a, frankly, remarkable debut on the NYSE.
Oh, yeah. What happened there?
With this an 83% gain on the first day. They raised $1.1 billion in the IPO, valuation over $10 billion. And it's led by Tom Farley, the former NYSE president, plus Peter Thiel was involved. Seems like a massive signal to institutional players.
Yeah, that definitely screams institutional confidence. A name like Farley, that kind of backing, it carries weight. And, you know, speaking of creating clearer paths for institutions, there's this important proposal from Andreessen Horowitz, A16, and the DeFi Education Fund. They're pushing for an SEC safe harbor.
Okay, safe harbor for what exactly?
For non-custodial blockchain apps. So think platforms like Uniswap or maybe Coinbase Wallet, OpenSea, places where you hold your own keys, your own assets.
Right, not like a traditional bank or exchange holding them for you.
Exactly. The idea is if these apps don't custody assets, don't give financial advice, don't control user funds, maybe they shouldn't be regulated quite like traditional brokers. It's about letting innovation happen here in the U.S. Without that constant regulatory cloud hanging over everything.
Makes sense. So less uncertainty could mean, well, more building, right?
Right.
Which kind of brings us to Aave. Their V4 re-architecture really caught my eye.
Oh, yeah. Aave V4 is a big deal in DeFi lending.
They're talking about these unified liquidity hubs and then modular spokes like core, E-mode, RWA for real-world assets, even custom ones.
Yeah. Right. So the key thing there is it allows for much better risk isolation. You can have different borrowing setups, different risk profiles, all pulling from the same big liquidity pool.
And they mentioned fixed rates, using LP shares as collateral. Seems much more flexible.
It's all about capital efficiency and, crucially, being able to price risk more accurately for different assets or scenarios. So yeah, more control, more options for borrowers, potentially unlocks a lot of capital.
Okay, super interesting on the DeFi front. And then, like, completely shifting gears. What about this Grandmasters thing on Solana?
Huh. Yeah, that one's different. It's basically AI agents playing chess against each other for money.
Seriously.
Yeah. And apparently their chess skill improves as their market cap goes up. You can even create your own agent. They look like custom anime characters, cost like 0.2 SOL. It's it's crypto.
That is wild. A blend of AI, gaming, finance.
Yeah.
Okay, but back on the more buttoned-up institutional side,
Yeah.
infrastructure is key. Circle's Arc network sounds important.
Definitely. Arc is a permissioned blockchain built specifically for tokenized assets.
And the specs are serious. 3,000 to 10,000 transactions per second, they say. Sub 350 millisecond finality. That's fast.
That's enterprise speed, comparable to traditional payment rails. They've got USDC as the native gas token, opt-in privacy features, even AI for treasury management.
It feels a bit like Stripe's tempo strategy, right? Building their own dedicated rails for clients who need fast, predictable, cheap settlement. And we saw Paxos applying for a national trust charter, too, moving towards federal oversight.
Yeah, all these moves, Circle, Stripe, Paxos, they're building the kind of robust, compliant plumbing that big institutions need before they can really dive in. It addresses a lot of their concerns.
Makes sense. But you need people to build and run all this. What's the talent situation look like?
Well, Dragonfly's latest talent report shows volatility, basically, extreme volatility. Job postings surged 60% in January, then bam, a 60% drop in March with like 750 job cuts. Yeah, but the key insight was that technical roles, the engineering jobs, stayed pretty stable through all that. So firms that kept hiring steadily probably gained a bit of an edge. There's maybe a 4 to 6 week lag between market sentiment and hiring changes.
Consistency pays off in hiring.
Seems like it. And, you know, for individuals maybe looking for less volatile returns, those non-leveraged stablecoin yield opportunities are still around. Things like SummerFi offering, 8, 11%, or Gearbox maybe even hitting 20%, the sleep well at night kind of yield.
Right. And we are seeing some positive signs reflected in the market too, aren't we? Solana's back over $200. Standard Chartered just put out some pretty bullish ETH targets.
Yeah, they raised them significantly, talking $7,500 by the end of 2025. And get this, $25,000 by 2028.
Wow. Okay, so pulling all this together,
Yeah.
what's the main takeaway?
It's this undeniable momentum. Across the board markets, the regulatory discussion, the actual tech being built, it's all pointing towards serious institutional adoption and the infrastructure needed to make it happen. It feels like a real shift happening.
It really does. An incredible amount of development on all fronts. So here's something to think about. As these lines keep blurring, between traditional finance, this cutting-edge tech, even gaming now, how are you going to navigate the opportunities and, the challenges that come from this constant acceleration?
Spoken Tech for your ears.